Miami Condo Mondays is a live podcast on the first workday of the week at 4 p.m. South Florida time. The program features former journalist and current Wall Street consultant Peter Zaleski of the Miami Condo Investing Club and former lender and veteran condo broker Jenny Huertas of CVRRealty.com. Recorded weekly in greater downtown Miami, this 1-hour discussion will provide a refreshing and sometimes controversial perspective on the state of the South Florida condo market from a pair of seasoned real estate professionals who do not always agree. The program won't tell you what to think about the South Florida condo market, but will give you something to think about before buying, selling, taking listings, or financing units. This podcast is not authorized by the Miami real estate industry and will quite possibly annoy many of its figureheads. Welcome to this week's episode of Miami Condo Mondays, broadcast live on the social media accounts of Peter Zaleski and Jenny Huertas.
Happy Monday, Miami. This is Miami Condo Mondays, a real estate podcast. We're going to discuss the latest topics going on in the South Florida Tri-County condo market, everywhere from Miami-Dade to Broward to Palm Beach County. I got you for basically an hour, and I apologize. We're running a little bit late. We were crunching some data, working all weekend, but trust me, it is worth sticking around for this particular podcast. If you're not a member of the Miami Condo Investing Club, where you'll be able to see this on demand, you're getting a glimpse for free. And I should tell you, I'm Peter Zaleski. I'm a condo consultant, also founder of Miami Condo Investing Club. I'm here with my partner, broker owner of CVR Realty, no one else but Jenny Huertas. Check out her website, cvrrealty.com. Before I introduce Jenny, let me just tell you, I asked Jenny a few weeks ago, Jenny, what does it kind of feel like this point of the cycle? You know what she said? Jenny, what did you say when I asked you that question? By the way, welcome to this episode, November the 17th, 2025. What did you say when I say, what does it feel like?
First, thank you and happy Monday. And I said 2007.
2007 is what Jenny said it felt like. So we were running some numbers. We were taking a look at the South Florida market overall for the summer buying season, which goes from May through October, and put together the data, got it going all the way back to 2000. Do any of you remember 2000? Some of you might actually see this video. You weren't even born yet. Well, I was around, and Jenny was a young woman getting going. And in going through AI to process some of the data I have, we have historical data going all the way back since the 90s, ran through the numbers. And you know what AI said, Gemini said? Jenny, it said that right now we are very comparable and similar to where we were in 2007 of the great South Florida condo boom that ultimately crapped out and what the hell, and a bunch of people lost their shirts, and others who were on the buy side were able to take advantage of us, including myself and Jenny. Jenny, 2007, you got a pretty good sense of where we're at statistically, and Gemini AI actually agrees with you.
Excellent. I mean, it's awesome. I told you so.
You love to tell everybody I told you so, especially some of those investors. You told them, you better sell. Yes. And they're like, no, the trees will grow to the moon and everything is great.
Or buyers that came back and say, hey, you remember that I was looking for a condo, $300,000, blah, blah, blah. And I say, yeah, do you remember that? You missed the bus. It's no longer available. So this is true.
Somehow I think you get some satisfaction telling people, I told you so. I know you've told me many a times.
It's true. I don't know what is it, but it feels good, actually. Sometimes it's for the bad, but, most of the time it's actually for the bad, but you should have listened to me before.
No, Jenny, as everybody knows, I do a podcast on Tuesdays. Tuesday podcast is based on statistics, data, metrics, all that type of stuff. So that podcast, by the way, runs at 4 o'clock on Tuesdays. Wednesday, by the way, I do the Peter Zaleski show, in which I interview somebody. This week we got Jim Fried on. He's a private money financier. Thursdays, I do the Stress podcast. And then Friday, we wrap it up when I do a podcast with Daniel Hernandez over at Compass Real Estate. We pick the top 5 stories that are going on the week, and then we tell you if we're a buy on it, a sell on it, or a hold on it. So all that being said, Jenny, I want to talk peripherally about what AI said and what our numbers are showing as to how 2025 is very comparable in the South Florida Tri-County condo market to where we were back in 2007. I'm not going to get too granular, but I am going to get into some of the generalities. I'm going to share with everybody who's watching here on this podcast live. And again, we will edit it and we will put it out. Probably going to put it out tomorrow because I'm coming out with a big report tonight as soon as this podcast is over. But I wanted to sort of front run our report with my conversation with Jenny because it's some really good stuff. So an on-demand version will be available tomorrow, and you'll be able to check it out at miamicondo.club. You also find it on Jenny's Substack. Jenny's also on Substack, as am I. So it should be available. It should be there for consumption. But the takeaway is that Jenny thinks we're in 2007 compared to last cycle, and AI confirms every single thing she has to say about it. And we're going to get into it. But we're going to get into a real broad, general basis. And then on Tuesday, I'm really going to kind of drill down and hit it hard. I don't want to bore Jenny with all that stuff. She doesn't even need to, she doesn't need to know what AI says because she already knew what AI figured out. What do you say, Jen?
That's great. That's good.
So Jenny, why don't we do this? I want to do a lot of comparing and contrasting today. We got everybody for roughly about an hour. I was running a little bit late because we were putting together some data. And again, I am going to share screens. You guys are going to see exactly what we're talking about, and you'll be able to really get a great understanding as to why I feel like we're in 07. Jenny called we're in 07 a few weeks ago, and AI has confirmed it. It's going to be based on statistics. It's not going to be based on lick of my finger, trying to guess which way the wind is blowing. We're going to go off of data. We're going to make the case for you. Now, you can agree, you can disagree, but it's definitely going to give you something to think about. Here we are in the beginning of the third week of the ever important South Florida winter buying season, which goes from November through April. And if anybody doesn't know, typically this is the time of year when there is perfect weather, and the weather's beautiful, Jenny. I mean, you went out kayaking over the weekend. You were zipping all around, and by the way, it's free, right? The kayak, they haven't figured out a way to tax you yet to launch.
I'm a paddleboard.
Paddleboard, kayak,
yeah.
Same, like they say in Southeast
Not the same.
Asia. Well, it's not the same, but basically you're navigating around the water.
Yes.
So everybody comes down here this time of year because the weather is great, like Jenny can confirm, based on the fact she was out paddleboarding while I was grinding my way through the numbers. But they also come here too because there's a number of events, tons of events going on. This weekend past, the Miami International Book Show began, the book fair. It began, and it's going to lead up until the weekend. The weekend, there's going to be a Saturday and Sunday is going to be filled with all kinds of exhibitors. Great authors from all over the world are going to come here and speak. And that typically is the beginning of the winter buying season. So people come down here for the events. They come down for the weather, and they also come down because there's a carnival-like atmosphere. You go to a club, you go to a restaurant, you don't know who you're going to see on the street. You're going to be rubbing elbows. It's kind of like where it was back in the 1920s during the Great Florida Land Boom. When Carl Fisher was bringing everybody down, they were all jumping on trains that Henry Flagler had brought all the way down to Miami. They were going out to Miami Beach. Everybody was celebrating, and hence the name, the Magic City, was born in terms of like magic. The city just grew up out of nowhere because so many people were coming in here. They were investing. The stock market was humming. Everything was sort of fantastic. So right now is the shopping time. People come down for other things. They inevitably fall in love with it. They say, you know what, maybe I ought to buy a condo. I deserve it. I've been working hard. Let's start looking. So they go out and they kick the tires. They look, and inevitably by the time they actually close on a unit, it tends to be, I don't know, April, May, June, July. So as we get into the summer buying season. So when you look at the data, what you typically find is the second quarter and the third quarter are the busiest time for transactions. The fourth quarter would be next, and then the first quarter is the weakest. Why is that? Because a lot of the deals that had begun the previous winter, they all start to get closed, and those deals that are in the process, they want to get them closed by the end of the year for tax purposes. And then we get into January, February, it's a little bit quiet. So these are kind of the general overview. Jenny, am I missing anything and sort of setting the scene for people?
No, pretty good. It's
okay.
Exactly like that.
Okay, fantastic. Now, Jenny, describe for me today the marketplace that we're sitting in. We don't need to talk about pricing or anything. We just need to talk about vibe. And then after you do that, I'm going to ask you to describe what you recall some 18 years ago back in 2007. And if you could just sort of compare and contrast why you called a few weeks ago that, you know what, Peter, it feels like 2007. So can you tell us where we are today? And can you tell us what you recall of 2007?
Yes. 2007 to me was when we start really feeling the stagnation on the market. The 2006 was at the top of the market, the pricing, the excitement. But then I was selling pre-construction back then. So I remember how quiet it was, 2007. So it was difficult to sell from the developer. So since I was working with the developer, I started seeing like, okay, we're gonna have to go with incentives. And I noticing the same thing happening now. We're gonna do incentives. We're gonna give you interest over the money that you're gonna give. We're gonna offer more commission to the brokers. We're gonna give you a beautiful car if you buy a penthouse. A lot of things that would not happen last year. So when you start seeing that, you know that it's because the sales are not happening.
Yeah,
So
but
that in the pre-construction.
yeah, but Jenny, I thought we're the gateway to Latin America. I thought 1,000 people a day are moving here. Why would you ever have to give incentives? The demand is so strong. I could never imagine you'd have to give incentives, especially back then when supposedly everything was cheap. And today,
Yes.
the sell side industry will tell you we are cheaper than Milan. We're cheaper than here. We're cheaper than here. Cheaper than Hong Kong. We're so much cheaper. Why would they have to give incentives?
Yeah, we as all marketing, and back in the time it was the same. We're still saying Miami is growing because I mean in 2007 it was really the beginning of the growth of the city. Now we are going from growing to luxury and to offer a lot of different things. Nowadays the difference is we have amazing restaurants, amazing parties, and all what Miami has to offer, more even than back then. The market is different, but the circumstances are very similar as far as I see in the market how the pre-construction is giving incentives. So every time you see that, you know that they're not reaching the sales. They can say that they sold $1 billion, but that's all marketing.
I can
Use
think of a couple.
incentives.
I can think of a couple projects that say they've sold a ton. Some of them are going up on man-made islands, and they're supposedly going to be fantastic. And you got to kind of wonder if you've sold so many, how come you're not putting a shovel in the ground immediately? Why are you waiting? This is a market that's all about timing. If your timing is right, you could be looking at 50% profit margins. If your timing is wrong, you could be showing up in bankruptcy court, trying to salvage whatever you can. So this market is violent. This market is volatile, and this market has been doing the same damn thing since the 1920s Florida land boom. Anybody wants to get context on that, there's a book that's out right now called 1929. It's written by a guy from CNBC called Andrew Ross Sorkin. I would tell you that's part two. Part one of where we were in the 1920s that ultimately led to the Great Depression. Part one is called Bubble in the Sun. It's a nonfiction book written about the 1920s Florida land boom, and it focuses on basically four characters. One is George Merrick, the guy who built Coral Gables. Another one's called Addison Meisner. Addison Meisner is the architect who came up with the Spanish Mediterranean design. He's the one who did Boca Raton. Then you got Carl Fisher. Carl Fisher is the guy who was an inventor amongst a group at least a company that owned an invention that created headlights. And they made a ton of cash. And Carl Fisher, who was up in Indiana and was involved with creating the Indianapolis 500, he went ahead and he bought a bunch of dirt on what would ultimately become Miami Beach. And he pushed that in a big way. And then, the other person they deal with is Henry Flagler. He's the guy who bought the train down. He was the one who was partners with Rockefeller, with Standard Oil. And he came down here, brought the train down here. He had a hotel right over there where One Miami is, in the Intercontinental Hotel, if you can picture that in North Bank of the Miami River. And then the fourth person for this book is Davis, Old Man Davis, out in Tampa. There's some islands called Davis Island or islands, I don't remember. But these are the four, and they walk you through it about how they got it going, how there was a supply chain issue, how there was a pause. Does that sound very familiar? And how the market never came back after the pause, and then you had a black swan. Black swan was something you don't expect suddenly happens, and you're like, oh my God, what do I do? And people overreact. So there's a lot of similarities in terms of where we are right now to where we were in the 1920s. And Jenny, you called it. You said we'd feel just like 2007, and that's exactly what Gemini AI has to say, and we're going to get into that shortly. But Jenny, in terms of giving people some of this history, you made a very good observation. You said pre-construction condos. These are effectively futures contracts. These are the units that are sold, and a developer says, listen, trust me. Don't worry, I can put it up. I want you to make a commitment. I want you to put down some deposits. Typically, it's 10% when you sign a contract. Another 10% when you go hard. Then it's a 10% when you break ground, and ultimately you got 50% in as a developer. Now, generally speaking, and everything is negotiable, a commission on a resale is 3%. A commission on a new project is typically 5%. Jenny, what are you seeing on commissions? Are you seeing any commissions that are over and above 5% yet to the buy side? And are you seeing any crazy incentives being offered by some of these developers who've sold everything out, but yet they still want to offer an incentive?
Yes, I see 7% commissions
7%
and
from what should
7%.
be 5%. So a
Yeah,
40% increase in commissions.
yes. And also I seen a lot of incentives and more, I saw a lot of the lately, I seen a lot of these buildings offering EB5, which is a program where you actually invest in the project. Doesn't have to do anything with the units. They're not gonna give you a unit, but that gives you a pathway to residency. And I see a lot of them like more than before having that program, meaning probably they need money. And now it used to be $500,000. Now it's $1 million per person. So there you go. That's what I see in pre-construction. And pre-construction is a great way to see it, just like the futures in the stock market, because it's gonna be in the next 2 or 3 years. Then, based on that, I seen in the resale, I see the people starting like putting the prices down little by little, like 20,000 here, 30,000 there. No, well, in some multi-million dollars, I seen as $1 million a discount in some of the big houses. So that's very interesting. It's totally feel like 2007. I don't know what the black swan is gonna be, but it seems like we are waiting for something to happen, and then this when the crisis might come. Like this bubble has to start, um, happening in our market.
Now, Jenny, in the 1920s, I'm talking 100 years ago. I didn't misspeak. 1920s, there was a boom going on in Miami. Stock market was humming. We had all kinds of stuff happening, and they used to bring building materials. They brought them down on a train, Old Man Flagler's train. They would bring them down, and it got to the point where so many people were coming. So many people want to come down here and invest because they were financing was suddenly available. They were all flocking down here. So Old Man Flagler, he put on restrictions so you couldn't bring as much cargo on the train because he was making more cash off of passengers who were getting in the train and riding their tails all the way down from the Northeast or anywhere, and they got here. So some creative types of developers, guys like Old Man Merrick, George Merrick, who set up Coral Gables and other places, they decided they were going to use ships to bring in all the cargo. And some of the cargo, they actually figure out a real cheap way to do it is we don't need like steamship or anything. Let's sail it down. Let's put it in a tall ship. We'll load that tall ship up. Kind of like the ones you see when they do the celebration of so many 100 years, or when the Colombian Navy brings in a ship like they do every year and they dock it over at Museum Park in downtown Miami. And if anybody knows where Watson Island is, if you don't know where Watson Island is, when you come off the Atlantic, you kind of go through a government cut would be on your left-hand side, and South Beach, South and Fifth would be on your right-hand side. Then you proceed down. There's a man-made island called Dodge Island, which is the port of Miami. And there's another island called Watson Island where they have the Children's Museum. So this tall ship filled with cargo, it tipped over. It tipped over because of bad weather and because of other things. And it was so heavy with cargo. It tipped over, and it took them a month in order to try to get it up so cargo could come back into Port of Miami, because Port of Miami used to be where Museum Park is. That's where the George Perez Museum is, as well as the Philip Frost Museum. And right over there, too, by the Casella Center, which is where the Miami Heat plays. It used to be called American Airlines Arena, and then for a short time, the FTX Arena, which was named after the guy who's in prison right now for the crypto fraud. But that's another story. So Jenny, it takes a month to lift up the ship. By the time they lift it up, the market had paused. People came to the reality that maybe this is such a good deal. And it never came back. A year later, 1926, you get the Great Hurricane of 1926. And everything starts going sideways. And ultimately, you get the crash of the stock market, which the book Bubble in the Sun argues the stock market crash was based on the speculation and the losses that occurred in Florida because of the land boom. So that's one scenario. Let's fast forward to 2007, Jenny. 2005, about October of 2005, what happens? A hurricane comes rolling up through the Gulf of Mexico. It's called Hurricane Wilma. It had been preceded in August by a hurricane called Hurricane Katrina. Anybody does it may not realize Hurricane Katrina came through Miami Beach first and hit Hallandale, everywhere in between on the Barrier Island. It then continued on to New Orleans, and it created the devastation that it did, that we all know. Well, at the late end of the summer, remember, summer goes from May through October, it came up from the Gulf of Mexico. That's our policy. We say Gulf of Mexico. So it comes up from the Gulf of Mexico, it hits Naples, cuts across the state, and it whacks South Florida, floods out all kinds of stuff. And anybody doing a condo deal or real estate deal, the insurance companies have something where they use longitude and latitude to figure out boxes. And if there's a storm within a box, they won't write insurance. So the deals paused. And by the time Wilma was done, it was a wet storm. It created all kind of flooding, knocked out power. At the time, you didn't need a generator in order to run a grocery store, an ATM, and more importantly, a gas station. So they had plenty of gas underground, but you couldn't get it out because there were no generators and electricity was gone for quite some time. And what happened, Jenny? It paused the market. And I would argue the ultimate crash that we began to see in 2007, but ultimately hit when Lehman Brothers failed in 2008, September 2008. It all paused after Wilma. So we had a 1 month window. Now let's fast forward to where we are in 2025. Jenny, how long was the federal government shut? And I don't know, we can look back or we can predict this right now, but the government was shut for quite some time.
42 days, something like that.
So it was closed for a little bit over a month. So
the longer shutdown ever in the history of the United States.
Longest shutdown ever. And again, not to talk politics, but just to say. So Jenny, I wonder if we're not going to look back and say, wow, we had this pause back in 1925. We had this pause with Hurricane Wilma. And who knows, maybe the pause we just went through because the federal government has just reopened. Maybe this pause is what is creating everybody to rethink. If you follow the stock market, there's been a sell-off in stocks as of late. There's been some warning, dire, bearish reports that are coming out about the stock market. People are sort of reconsidering everything. We got slowing employment. Inflation is still growing. We're not going to know exactly where it is yet because data is not available. Remember, we were closed for, 40-something days. So they didn't collect data other than inflation one time. And the inflation data was collected simply because of Social Security benefits, because of the new year and everything else. So that's kind of the comparable I would make. Jenny, any thoughts on that? I know it's too early to be comparing the federal government shutdown, but I think it is critical to realize there has been a pause in terms of activity, travel. Flights were cut back 10% throughout the United States. So you got any opinions, either agree or disagree? And we all know you're willing to share your mind.